How do you handle a breakout? So we're using Thinkorswim here, and I want to create an order that will handle a breakout and then automatically set a bracket around that breakout to handle capturing the profit, or in the event that it reverses on me, will put in a stop loss. And I want all of that to be kind of automatic. I don't want to have to babysit it. So the profit taking and then the stop loss need to be order cancel order or conditional, so that if one executes, either the profit taking or the stop loss, it automatically removes the other one. I don't want that order hanging around, and definitely don't want orders hanging around. And the breakout is a special type of stop order or a limit order. It's actually called a buy stop, and we'll take a look at that. That'll handle the case where price goes up through a level, and then it buys it, expecting it, and then takes that position, expecting it to continue up. And so here's a case here. Here we have oil. It has some level here, and I expect there to be a breakout here. It's dipped down, and I think it's going to come up and go through that level. And that's where I want to buy, because if it goes through that level, I'm fairly confident that it's going to continue moving up. That's the thesis here. And so if it does do that, I've found a logical place to put my profit taking, which is here. And if it reverses and comes down far enough, there's an area where I'm just going to give up on the trade, and that's going to be my stop loss. So that's the order that I want to create. Onto the chart. So let's build that order. Now here's exactly that situation. It looks like we're about to get to a breakout. Oh man, this is exciting. And we'll just move it down a little bit here so we can zoom in on that area. All right, so I think the breakout is going to be at 63. I want to take profit at about 64, and I want my stop to be somewhere down here. So the way we do this is we, at least in Thinkorswim, we go up and click on the price, choose Buy Custom with an OCO bracket. Now I did this in a previous video, but here I'm going to have to make some modifications. So we have our buy price, which will be at 63. Now this is going to be not a limit order, because a limit order is expecting us to come down to a price and then at that limit then buy. What we want is a buy stop. Oop, hit the wrong one. Buy stop. Because what it will then turn into is it'll come up to that price, trigger, and then turn into a market order and then execute at the best possible price. Now it may not be at exactly your price. Might be a tick below or a tick above, whatever the market gives you at that point, but you'll be in the order. So you have to choose a place where you think a breakout is valid. And then we have our profit set at 64. That's a limit order. So if it comes up there, then removes the contract. And then we have our stop loss down here. Now, for pattern cast, all of our orders, all of our alerts are for the day, for that session only. So here we properly have it as a day order. But if we get into the order, we know that in pattern cast that we give it up to 4 days. So we're going to change these from day to good to cancel. And then we'll monitor it for the next 4 days and see what happens. So there's our order. It looks relatively complex when you look at it here, but when you first set it up, it's really not that difficult. All right, and now we're going to confirm and send and look at our confirmation, make sure everything looks cool. Yeah, it all looks cool. And we'll send. All right. So now Thinkorswim has given us this nice visual. We can see exactly where that order is. Here we can see if we break out above here, we'll turn it into a buy. We're expecting it to move up to this level, and then it will automatically take profit if it reaches there. We know that 65 or almost 70% of our alerts that trigger, like this one, will reach the target potential or greater. 65 to 70% will reach the target or beyond. Now, the actual number, the actual average is something like 150% of the target, which is absolutely insane. About 80% of them will reach about 60% of the target. So keep those in mind. But there is a potential for it to come down here. Now, I think that maybe an appropriate place to put this stop loss is probably just below this price action here. That should probably provide some pretty good support if we were to take a look at the volume profile, which I haven't, but I can assume just based on looking at this chart, there's going to be a big volume well right here. And that would be a great place to put my stop. There's a good chance that if it comes down, it's probably not going to go down much further than that. So that'll give it plenty of room to work. Now, of course, when I move that over, I get another confirmation on that, so I'll put that in. All right, so there we are. There's our buy stop, which is a buy limit order that turns into a market order. So it hits that price and then turns into a market order, takes the order, and now we're in a buy. If it reaches this profit potential, this stop limit, it will sell and take the profit. If it goes against us, it'll hit the stop loss and get out of the market. So there's your setup for breakouts. We love breakouts! One of my favorite trades and an easy way to set up everything automatically. See you next video.